Hello everyone. Today we're going to talk about Bitcoin, which is trading at $115,191 after it was at $112,000 at the start of yesterday, $117,400 closer to the end of the day, and now it's $2,000 lower. All of this happened against the backdrop of Jerome Powell's statements regarding the interest rate. Most likely, on September 17th at the meeting of the Federal Open Market Committee, this rate will be lowered. And this will happen for the first time this year, because there was a rate-cutting cycle roughly from September to December of last year. It was lowered from 5.5%, I think, to about 4.25%. And after that, the cycle stopped. What does a reduction in the key interest rate actually mean? It means that the cost of money, the cost of loans for individuals and organizations should become lower. In principle, this stimulates or is supposed to stimulate the economy, to put it simply. But the economy is a complex mechanism, and things are rarely that simple. Usually it's more complicated. What does this mean? It means that if the Federal Reserve lowers the key interest rate, it probably sees reasons why the economy needs to be stimulated with cheaper money. There are probably some problems in the economy. You might ask me, what kind of problems could there be if the stock market is at historic highs, so everything seems to be fine? But it's like when a person seems to feel great and then it turns out that a few years ago some malignant tumor started developing. And he felt wonderful and had no idea that in a few years he would die. Or, well, maybe he'll start treatment and recover. But, the situation is similar with the economy. So if it seems to you that everything is great, that doesn't mean at all that the mechanisms that will lead the economy into very serious stagnation aren't already in place. And so, when the Federal Reserve, in my opinion, sees reasons that the economy might start to stagnate, they begin to lower the interest rate to stimulate the economy. But this is a very inertial process. And it would seem, here it is, cheap money. The economy should be growing, but it can continue to decline out of inertia, even though money has become cheaper. And it is precisely perhaps for this reason that almost all financial crises actually began during periods when the interest rate was being lowered, strange as it may seem. Now let's get back to Bitcoin. So, I explained all this to make you aware of the risks of a decline. Well, there are simply historical statistics on the stock market. And cryptocurrencies are risky financial instruments, so anything can happen. But not everything is so clear-cut at the current moment. You might ask me, can Bitcoin grow? Yes, it can. Can it set a new all-time high? Yes, it can. And right now, the situation on the daily candles looks bullish, while on the weekly it looks bearish. Who will win? I don't know. But we'll look at scenarios where it makes sense or is technically possible to go long, and when it's technically possible to go short. Let's go. On the daily candles, the price has once again dropped, or was dropping, to a very important support level at 111,980. This is the all-time high. Well, not the all-time high. Actually, no, this is the all-time high that was reached on May 22nd of this year. Take note, we tested it. Let me highlight it. Right here in this area. Let's do it in white. And we tested it again in this area. The price came just a little short of the 100-day moving average. Yesterday, it closed right here above the 50-day moving average. And this supports the case for growth. Another bullish sign is that there was an engulfing of this large red candle and this red candle here. And this is a reversal, a formal market reversal to the upside. But there's a nuance. The current daily candle is trading below the 50-day moving average. And it might turn out that this pattern is playing out a different scenario. We had range-bound trading for many days, even weeks. The bottom of this range was 117,420. Now we've broken through this range to the downside once again. So here we had one attempt to break out of the range, and here's the second one to the downside. Accordingly, the current upward movement can be seen as a retest of the lower boundary of the range. Take note, yesterday's high was 117,429.05. So we moved $9.05 above the 117,420 level, but ultimately went down. And from this perspective, with this pattern, our target level is no longer 111,980, but at least this one, 110,263, and at most this one, 106,133. And that's already outside the channel, which means we could even reach this level, 102,235. But still, I wouldn't rush to open a short position. First of all, you need to wait for the current day to close. Secondly, the Chicago Mercantile Exchange, and I'll show you this right now. Here you go, it closed at 117,235 on Friday. This is a magnet level. This means that with a fairly high probability we could return to this level by the end of the current week. So it seems like it could go up, but also down. Now let's come back here. When can you go long? You can only go long when we see a daily candle close above this level, 117,420. Even the very fact of closing above the 50-day moving average is not enough for this. Why? Because it's not out of the range. We tested it and are now showing a move downward. But if the price closes above 117,420 on the daily chart, then it gets a number of targets. The first target is the level of 119,841. The second target is 123,218. And after that we can already talk about a new all-time high. But right now we need to wait for the close of the current daily candle, or maybe even the next day, and see where it closes. If it closes with a red body, and if you're in a hurry, you can try to open a short position with a stop above the 117,420 level. But if it closes with a green body and even higher than 117,420, then that's a path upward towards a long position. Now let's look at the weekly candles, or even first at the monthly candles. What do they tell us? Notice that the August candle has no body. This is a candle of uncertainty. At the same time, it set a new high. Formally, this points to a continuation upward. Now let's look at the weekly chart. Well, the month isn't over yet. There's still a whole week left until the end of the month, so it's too early to draw conclusions. Look, what do we have here? Here we have a situation of bull, bearish engulfing. But this is also a low-quality engulfing. Why? Because we engulfed this candle here. Yes, the green one, but it didn't set new highs. It's just a candle of some sideways movement. But here's a potentially reversal candle, and here is also potentially a reversal. Why? Because both of them updated the all-time high and indicate the risk of a decline. But a full-fledged reversal can only be confirmed when this candle is engulfed as the price moves below the $109,000 level, with the week closing below $109,000. Therefore, from a strictly formal and technical point of view, this current price movement should be considered as a sideways consolidation, but with the significant risk of potentially moving towards the $109,000 area in the near future. And again, there is a contradiction here. Why? Because if we go back to the daily candles without any markings, we can see that this green candle, first of all, engulfed this red one yesterday on August 21st, as well as this red one from August 19th. In other words, with a single move, it covered the drop of 3 days at once. Well, 2 days, but there was a small green one in between them. Accordingly, the daily candles still suggest a continuation of the upward trend. And if we take the sideways movement concept as a basis, then in this case, according to the weekly candles, we could see growth toward the area of $119,500. And there, we'll keep an eye on the closing levels of both the daily and weekly candles. So trade carefully and at least wait for today's close. And a long position should only be considered if the daily candle closes above 117,420. Don't forget about stop losses. Don't forget to leave comments, likes or dislikes. Subscribe to the video and hit the bell. Goodbye.